What kind of time frame are you considering?
I'm in no rush. I'm in no rush to go public. Public is, I guess, a way to potentially make more money, but at the expense of a lot of public company overhead and inevitably a whole bunch of lawsuits, which are very annoying. So really something needs to be done about the shareholder derivative lawsuits in the US because it allows plaintiffs' law firms who don't represent the shareholders to pretend that they represent the shareholders by getting a puppet plaintiff with a few shares to initiate a massive lawsuit against the company. And the irony being that, extreme irony, that even if the class they purport to represent were to vote that they don't want the lawsuit would still continue. So how can it be a class action representing a class if the class vote against it? And that's the bizarre situation we've got in the US. It's a dire need of reform. As anyone who's run a public company, you've experienced this. It's an absurd situation that needs to change.
Well, do you think Donald Trump might change it? You've certainly got his ear. I imagine that you've put this to him. Is this something you're trying to change before any Starlink IPO?
Well, it would need a law to be passed. The trouble being that you need 60 Senate votes, and the Democrats will vote against it. The plaintiff's bar is, I believe, the second largest contributor to the Democratic Party. That's the issue. At the state level, this can be solved. And I should say, Texas recently passed a law which, at least at the state level, made class action reasonable, because you have to get at least 1 in 33 shareholders to agree that they are part of a class of shareholders. 3%. Okay. This will really help with frivolous lawsuits.
Okay. Let's talk about AI, which is in so many of your businesses and in all our worlds in different ways. It's one of the big changes, the development of generative AI, since you last spoke to this forum 3 years ago. You're in this space, of course, with Grok, which almost everyone will know. You co-founded OpenAI and then left, and you've obviously got a legal battle with OpenAI and Sam Altman. I wonder if you could say something about the status of that, because you were together in Saudi Arabia with the president last week, with Sam Altman. In the same place at the same time.
Sam was in the neighborhood.
Okay, so does that mean you are pushing ahead with the lawsuit against OpenAI?
Yes. So look, I came up with the name OpenAI as an open source and as a nonprofit, and I funded OpenAI for the first roughly $50 million, and it was intended to be a nonprofit open source company, and now they're trying to change that for their own financial benefit into a for-profit company that is closed source. So this would be like, let's say you funded a nonprofit to help preserve the Amazon rainforest, but instead of doing that, they became a lumber company, chopped down the forest, and sold the wood. You'd be like, wait a second, that's not what I funded. That's OpenAI.
They've made some changes to their corporate structure, though, haven't they, since, in recognition of what you've said?
No, that's just what they told the media.
Okay. They have partly walked back their plan to restructure the business. I guess that's made no difference to how you feel about it. So you're determined to see them in court?
Of course.
Okay, well, that's certainly going to be one to watch. I also wanted to ask you about AI and regulation, because when you were here last talking to John Micklethwaite, you had some pretty strong words about the risk that AI poses, and you said that you really felt what the US was missing was a federal AI regulator, that, you know, something along the lines of the Food and Drug Administration or the Federal Aviation Administration. Now, you're clearly now in a zone where you're more on the cutting regulation side than wanting new regulators. So has your view changed on the need for an AI regulator?
Well, it's not that I don't think there should be regulators. You can think of regulators like referees on the field in sports. there should be some number of referees, but that you shouldn't have so many referees that you can't kick the ball without hitting one. In most fields in the U.S., the regulatory burden has grown over time to the point where it's like having more referees than players on the field. And this is a natural consequence of an extended period of prosperity. It's very important to appreciate this. This has happened throughout history. When you have an extended period of prosperity with no existential war, there's no cleansing function for unnecessary laws and regulations. So what happens is that every year more laws and more regulations are passed because legislators are going to legislate, regulators are going to regulate, and you'll get the steady pile of more and more laws and regulations over time until everything is illegal. And let me give you an example of a truly absurd situation. Under the Biden administration, SpaceX was sued for not hiring asylum seekers in the U.S. Now, the problem is it's actually illegal for SpaceX under ITAR, International Traffic in Arms Regulations, to hire anyone who is not a permanent resident of the United States, because the premise being that they will take advanced rocket technology and return to their home country if they're not a permanent resident. So we're simultaneously in a situation where it is illegal to hire asylum seekers, and it is also illegal to hire asylum seekers. And the Biden's Department of Justice chose to prosecute us despite both paths being illegal. Damned if you do, damned if you don't.
But my question was specifically about a regulator for AI, which you said 3 years ago was needed. And you said we need to be proactive on the regulation of AI rather than reactive. Have you changed your mind on that?
No, of course not. No, of course not. What I'm saying is that there should be some referees on the field, a few referees, but you shouldn't have a field jam-packed with referees such that you could not kick a ball in any direction without hitting one. So the fields that have been around for a long time, such as automotive, so aerospace, the sort of food and drug industries, are over-regulated, but the new fields, like artificial intelligence, are underregulated. In fact, there is no regulator at all.
So there should be. Do you still think that?
Yes, I'm simply saying, which I think is just basic common sense, that you want to have at least you want to have a few referees in the field. You don't want to have an army of referees, but you want to have a few referees on any given field, in any given sport, or even any given arena, industrial arena, to ensure that public safety is taken care of, but you don't want to have. So there's a proper number of referees. Like I said, it's actually very easy to visualize this when compared to sports. If the whole field is packed with referees, that would look absurd. But if there were no referees at all, your game's not going to be as good. Okay,
so let's then talk about your new world, your role advising government. You are in this unique and unprecedented position of having billions of dollars worth of contracts with the federal government yourself, mostly through SpaceX, and also now an insider's knowledge of it because of DOGE. Can you see that there is a conflict of interest or a potential conflict of interest in broad terms just through that very fact?
I don't think so, actually. There have been many advisors throughout history and the U.S. government and others who have had economic interests, and I am simply an advisor. I don't have formal power, and that's it. The president can choose to accept my advice or not, and that's how it goes. If there's a single contract that any of my companies have received that people think is somehow not was awarded improperly, it would immediately be front-page news, to say the least. And if I didn't mention it, certainly my competitors would. So if you're not seeing that, then clearly there's not a conflict of interest.
There's another way, though, to look at it, that, for example, you have many competitors, whether it's companies like Boeing or companies who would like to do more of the kind of work you do for NASA, Blue Origin, Rocket Lab, and because Doge is in every federal government department, you or people who work for Doge, and you are the driving force behind it, have an insight into those companies' affairs and those companies' relationships with the federal government.
No, all we do is we review the organization to see if the organization has departments that are no longer relevant. And then are the contracts that are being awarded good value for money? In fact, frankly, the bar is not particularly high. Is there any value for money in a contract? And if there isn't, then we make recommendations to the secretary. The secretary can then choose to take those actions or not take those actions, and that's it. And then any action that is as a function of Doge is posted to the Doge website and to the Doge.gov or at Doge handle on the X platform. So it's complete transparency, and I've not seen any case where, to the best of my knowledge, there's even been an accusation of conflict, because it's completely and utterly transparent. Okay. That's it.
And what about the international dimension? Now, let's think about Starlink. Starlink is obviously a very, very good internet service. It's sought after all over the world. It's critical to the front line in Ukraine. It has also had more contracts coming its way, and there is some evidence that companies are allowing access to it because they want to be close to the Trump administration and send the right signal. So Bloomberg broke news today that the South African government is working around the rules on black ownership in order to allow Starlink in, and that is being done on the eve of the visit that President Ramaphosa is going to make to the White House. Do you recognize that as a conflict of interest?
No, of course not. First of all, you should be questioning why are there racist laws in South Africa? That's the first problem. That's what you should be attacking. It's improper for there to be racist laws in South Africa. The whole idea with what Nelson Mandela, who was a great man, proposed was that all races should be on an equal footing in South Africa. That's the right thing to do, not to replace one set of racist laws with another set of racist laws, which is utterly wrong and improper. So that's the deal, that all races should be treated equally, and there should be no preference given to one or the other. Whereas there are now 140 laws in South Africa that give that basically give strong preference to if you're a black South African, and not otherwise. And so now I'm in this absurd situation where I was born in South Africa but cannot get a license to operate in Starlink because I'm not black.
Well, it looks like that's about. Looks like that.
Right to you?
Looks like that's about to change.
I just asked you a question. Please answer. Does that seem right to you?
Well, those rules were designed to bring.
Yes or no?
Those rules were designed to bring about an era of more economic equality in South Africa, and it looks like the government has found a way around those rules for you.
I asked you a question.
This is your interview. Everyone wants to hear from you.
Ask your question. Yes or no?
Not
Racist
for me.
Laws, yes or no?
Not for me to answer. I have got a question for you about your government work and the amount of savings.
Why do you like racist laws?
This is not for me to answer. Come on.
Yes, it is.
Now, you wouldn't be trying to dodge a question.
So you have to ask a question.
I
answer my question. You answer mine.
I think I'm sure you can have that conversation directly with the South African government if you want to. I want to ask you about the total.
I can't believe it. That's not good.
I want to ask you about the total amount.
Why do you like racist laws?
I want to ask you about the total amount that you're planning to save through Doge's work. Before the election, you said it was going to be at least $2 trillion. The number currently on Doge.gov is $170 billion. That's a big change. What happened to the $2 trillion?
Well, do you expect it to happen immediately?
Well, is it going to happen? Because Doge is supposed to run till next July.
I mean, your question is absurd in its fundamental premise. Are you assuming that on day, within a few months, this an instant $2 trillion saved?
No, I'm not at all. I'm just asking, is that still your aim then? Is it still your aim to get to $2 trillion?
Have we not made good progress given the amount of time?
That's exactly what I'm asking. So is it still your aim to go from 170 billion to 2 trillion?
The ability of Doge to operate is a function of whether the government, and this includes the Congress, is willing to take our advice. we're not the dictators of the government, we are the advisors. And so we can advise, and the progress we've made thus far, I think, is incredible. The Doge team has done incredible work, but the magnitude of the savings is proportionate to the support we get from Congress and from the executive branch of the government in general. So we're not the dictators, we are the advisors. But thus far, for advisors, the Doge team, to their credit, has made incredible progress.
You've talked about $4 billion a day being saved, but that won't get, which is, and I think everyone can agree that combating waste and inefficiency in government is a very good thing. But if you add that up, it's not going to get to $2 trillion over the lifetime of Doge.
I'm sorry?
The $4 billion a day, if Doge is going to run till next July, is not going to get you to $2 trillion. But you still say it's your aim, so we'll take that as read.
There's what Doge. I mean, I feel you're somewhat trapped in the NPC dialogue tree of a traditional journalist. So it's difficult when I'm conversing with someone who's trapped in the dialogue tree of a conventional journalist, because it's like talking to a computer. Doge is an advisory group. We are doing the best we can as an advisory group. The progress made thus far as an advisory group is excellent. I don't think any advisory group has done better in the history of advisory groups of the government. We do not make the laws, nor do we control the judiciary, nor do we control the executive branch. We are simply advisors. In that context, we are doing very well. Beyond that, we cannot take action beyond that, because we are not some sort of imperial dictator of the government. Mm-hmm. There are three branches of the government that are to some degree opposed to that level of cost savings. But nonetheless, let's not criticize whether there's $4 trillion, and instead look at the fact that $160 billion has been saved, and more will be saved too.
And as I said, I think everyone can agree that cutting waste and indeed fraud in any government and being responsible with taxpayers' money is a very good thing. So yes. I can see that you're proud of that work. I do want to ask you about USAID and the comments that Bill Gates made the other day, and I know that you called him.
Yeah, he's a huge liar.
I know you've said that already. I wondered.
Also,
and I'm just.
Who does Bill Gates think he is to make comments about the welfare of children, given that he frequented Jeffrey Epstein?
Okay, well, he said he regrets those, and he spent a lot of his own money on philanthropy around the world over the years. My question to you is: have you looked at the data to check if he might be right that the cuts to USAID might cost millions of lives?
Yes. I'd like him to show us any evidence whatsoever that is true. It's false. What we found with USAID cuts, and by the way, they haven't all been cut. The parts of USAID that we found to be even slightly useful were transferred to the State Department. So they've not been deleted; they've simply been transferred to the State Department. But many times over with USAID and other organizations, when they said, "Oh well, this is going to help," children, or it's going to help some disease eradication or something like that. And then when we ask for any evidence whatsoever, I say, well, please connect us with this group of children so we can talk to them and understand more about their issue. We get nothing. They don't even try to come up with a show orphan, meaning like it's sort of like, well, can we at least see a few kids? Like, where are they? If they're in trouble, we'd like to talk to them and talk to their caregivers.
Okay, well,
and then we get nothing as a response, because it's what we find is an enormous amount of fraud and graft.
Okay, let me put this example to you.
Very little of it actually gets to the kids, if anything at all.
Okay, let me put this example to you, because you grew up in South Africa, so you'll know the impact of HIV/AIDS well. And this is why I asked about the data. The US led on international efforts to combat HIV/AIDS treatment, prevention, and there's an initiative called PEPFAR, which is credited with saving 26 million lives in the last 20 years. It was part of the foreign aid freeze, then there was a limited waiver. Its services are disrupted, and UNAID says if permanently discontinued, there will be another 4 million AIDS-related deaths by 2029. So if you look at that example, which is backed up by data, in 2023, 630,000 people died of AIDS-related illnesses, then perhaps Bill Gates's figures are not wrong. Millions of lives could be lost.
First of all, the program, the AIDS medication program is continuing. So your fundamental premise is wrong. It is continuing. Now, do you have another example?
Elon, not in its entirety.
It is false.
Not in its entirety. There's a limited waiver, and UNAIDS have said that not all of the services that were previously funded by USAID are continuing. So that's why I put that example to you.
Okay, well, which ones aren't being funded? I'll fix it right now.
Okay, well, actually, they're all on the UNAIDS website, so you'll be able to see them. But mostly they are to do with prevention. And for example, the rollout of a drug called lenacapavir, which was hailed as one of the biggest breakthroughs against AIDS for many years, which came out last year. So if you are, perhaps, I'm sure UNAIDS would be delighted if you're able to look at that again.
Yes, but if in fact this is true, which I doubt it is, then we'll fix it.
Okay, fine. So finally, your political influence. I wondered whether you have decided yet how much you're going to spend on the upcoming midterms. Is it you spent a lot more money on the last US election than you envisaged when you were speaking here 3 years ago. Are you going to continue to spend at that kind of level on future elections?
I think in terms of political spending, I'm going to do a lot less in the future.
And why is that?
I think I've done enough.
Is it because of blowback?
Well, if I see a reason to do political spending in the future, I will do it. I do not currently see a reason.
Okay. And what about political influence beyond the US? How often do you speak to President Putin?
I don't speak to President Putin.
You've never spoken to President Putin?
I was on a video call with him once about 5 years ago.
Okay. That's the only.
Why would you think I speak to President Putin? Oh, you must. I get it.
Because
you believe the legacy.
Actually, I've heard you speak about it. For example, in your West Point speech, you said, "Oh, I challenged President Putin to was it an arm wrestle?" And I know the Wall Street Journal has reported your reported conversations.
Oh, yes.
If you're saying they haven't happened other than once, I'll take that as read.
Is there a worse publication on the face of the earth than the Wall Street Journal? I wouldn't use that to line up my cage for parrot droppings. That newspaper is the worst newspaper in the world. If there's one newspaper that should be pro-capitalist, it's the one with Wall Street in the name. But it isn't. So I have the very lowest opinion of the Wall Street Journal. Absolute nonsense. And you clearly believe the tripe that you've read in those papers.
I read very widely, and I'm putting these questions to you so that you have an opportunity to respond to them, which you are, and for which we're all grateful to hear your responses.
Yes.
Okay, we are out of time. So
you mentioned me challenging. I did so on the X platform. I challenged Vladimir Putin to single combat. I didn't talk to him. That was a post on the X platform.
Great. That's why I asked you, and you've clarified and explained. Thank you. That's why I was asking whether you have had reported conversations, and you said you haven't, other than a video call. Okay.
Typical legacy media lies.
Okay, listen, I actually thought I might give Grok the last word, because when I asked Grok what your hardest challenge is, it said the strain of managing multiple high-stakes ventures amid financial, regulatory, and public relations crises. And I wondered whether you recognize that characterization and whether you do think that this is a pivotal year in your life.
Well, every year has been somewhat pivotal, and this one's no different. In terms of interesting things that hopefully are accomplished this year, getting Starship to be fully reusable, so that we catch both the booster and the ship, which will be the first fully reusable orbital rocket ever in history, would be a profound breakthrough, as the essential breakthrough necessarily to make life multiplanetary and ultimately become a spacefaring civilization. We've got Neuralink, which has now helped 5 patients restore capability using the telepathy implant, where they're able to control a computer simply by thinking. We'll be doing our first patient to restore sight with our blind sight implant, which is either end of this year or early next. In fact, that first patient might be in UAE, since we have a relationship with UAE and the Cleveland Clinic there. I think on the AI front, we are close to what you might call AGI, or digital superintelligence. I think we are seeing an explosion in digital superintelligence here. And then we've got at Tesla what we'll be launching unsupervised autonomy, basically self-driving cars with no one in them, in Austin next month. So it's a big year for sure. Many other things in the works too.
Okay.
I'm a technologist first and foremost.
Elon Musk, thank you very much for joining us here at Qatar Economic Forum. Thank you.
That was Elon Musk with Bloomberg Weekend's editor-at-large, Mishaal Hussain, at the Qatar Economic Forum, talking about his intention to stay on as the CEO of Tesla for the next 5 years. Also talking about political spending, saying that he's going to do less of it in the future, saying that he thinks he's done enough.
Yeah, he sure did say that, which of course he spent millions in the most recent one. So news of the day, he also said he was close to artificial general intelligence. From the technology world, that is a big deal. There's been a lot of questions around how close that comes, if at all, but we'll see. There weren't a whole lot of details on that front, but certainly a lot of details on his views on Tesla, Doge, and the future ahead for Starlink.
Yeah, very interesting interview indeed that we can probably watch again and glean even more from. I want to check on what's going on in markets. That went over the market open, and it looks like we've snapped a 6-day winning streak. So the S&P 500 now down 1/3%, still at 59.42. So still more than 18, almost 19, I believe, % up from the lows that we saw after April 2nd. What an incredible round trip we've made. The NASDAQ definitely has entered bull market territory, now backing off a little bit, 0.5%. But what a rally it's been. Let's talk about these market moves with Moneta, Chief Global Market Strategist Ethan Devitt. She joins us now. Ethan, it's pretty amazing to watch stocks kind of melt up here. I'll use that term because I heard it on Bloomberg Surveillance this morning with Ed Yardeni. But yesterday, Jamie Dimon said this shows, I think he said, an extraordinary amount of complacency from investors. Do you agree?
I would agree. And I would say that bond markets are really like the conscience, essentially, of markets today. They are the ones that are ringing an alarm bell, suggesting that all is not as it seems, that this tax bill is only going to worsen the fiscal situation. And we know before that they have been second-guessing the Fed. They've been second-guessing many of the hard indicators that have been quite resilient. They perhaps have been more in line with the soft indicators. So I would agree with that there is a degree of complacency. There's a degree of FOMO. And just like the interview that we just listened to with Elon Musk, who said everything's okay at Tesla, but we got very little detail as to why it's okay. And I think there was excellent probing there. So we're not getting the detail, whether it's on trade deals or on underlying company dynamics. And if investors are essentially shooting first and asking questions later when it comes to getting back in the market, there may be some repercussions from that.
Ethan, there's a lot to digest over the last hour, certainly, but I do want to just roll back a little bit and take your macro view, because this was another day where we got a lot of interesting news from corporate America regarding how they're absorbing tariffs and how the consumer is behaving, and the answer is not so badly yet.
Yet. That's exactly right. It has been a lot of stockpiling, a lot of essentially building of inventories, positive views in the first part of the year, and we haven't seen prices being pushed through. And even when there's a suggestion of pushing prices through, such as from Walmart, there may be a suggestion that that's a political move and maybe they shouldn't do that. So it's not as easy as simply passing the prices through. But I'd say the fact that we haven't seen this yet is not a sign that the uncertainty that tariffs have caused will not take their toll. I think what we can't measure in a stock price is planning and the absence of planning, that the uncertainty in markets is leading to this absence of planning. We've talked about home price sales being poor. That's essentially a translation of planning. People plan for the future through buying a home. They can't do that as easily right now. So I think measuring that and really parsing some of the outlook from companies will be much more interesting than parsing the history.
What do you think right now about diversification, Ethan? I mean, I keep banging on about this, but for the last 15 years, if you just owned the S&P 500, you would have outperformed everybody else. It seems as though that view has finally changed, that diversification really is important again. Do you go to other countries? Do you go to other sectors? What's your view on it?
It's a little bit looking at cycles. 15 years, certainly, up until now, non-US markets were underperforming the US markets. Emerging markets were underperforming US markets. So anybody whose memory only went to that cycle would have never essentially seen the US not outperform. That is starting to change now. We see that even in this rambunctious rally after the tariff news came out around the negotiations, non-US markets have still outperformed US markets. So there is something fundamental at work there, something whereby the fundamentals of Europe, its resilience, its economic growth, the fact that they're easing monetary policy, that's all starting to translate now into a positive outlook for some of the stocks there. We've always believed in diversification. It has been hard to justify, but particularly now, non-US markets and non-US currency is an essential piece of diversification that investors should do. But just as you said, just simply owning the S&P would also have worked out quite well. And again, stressing the lack of market timing that's important to that.
Moneta's Ethan Devitt, we thank you so very much for your time today, parsing through all of those headlines, of course, coming out of earnings, but also Elon Musk. Speaking of Musk, I just want to take a quick check on Tesla shares. On the heels of him saying that he'd stick around for the next 5 years, you did see a jump. That was what was helping out the S&P 500 a little bit earlier in the trade. Still up about 0.9%. Of course, the broader S&P is still lower, but the consumer discretionary sector due to Tesla actually holding up a little bit.
Do we show a GIP? If you show a GIP of Tesla, you see that huge pop, and then it comes back down, still up 0.9%, but definitely a gain on that answer from Elon Musk. Coming up, David Kostin from Goldman Sachs on the discount for Mag 7 stocks. They've gained a lot in price lately, but not necessarily as much in valuation. And Citi's Phil Drury talks about the IPO pipeline, plus
Josh Easterly of 6th Street joins the show as well. We're going to talk about how they're all absorbing the market that we're walking through right now. No slow bleeds today, Matt Miller. Stick with us. This is Bloomberg Open Interest.
We are 30 minutes into the trading day and snapping a 6-day winning streak on the S&P 500. You can see we're trading down 1/3%. The NASDAQ off more than 1/2, and the 10-year yield creeping back up into the danger zone.
Yeah, it's interesting. We have to remember that Trump, of course, is speaking to lawmakers, and that anxiety around the budget still exists. And we've been talking about those snapping of that 6-day winning streak. The day is young. Remember, the market is awaiting fresh catalysts. Goldman's David Kostin joins Open Interest to talk about what those might be this hour.
And you mentioned President Trump. He was downplaying the SALT deduction debate as he met with lawmakers on Capitol Hill. We watched him walk in, and he said it was a very interesting issue.
Yes, we'll speak about all those issues. Plus, Elon Musk tells Bloomberg that he's committed to leading Tesla for years to come. Maybe stepping back a little bit from political spending. We're going to give you more from that conversation ahead.
Yeah, really interesting interview there with Michal Hussein, our Bloomberg Weekend editor-at-large. Let's take a look, though, right now at stocks, because the Mag 7 is likely going to outperform the rest of the S&P 500 again this year. That's the latest call from Goldman Sachs. The team there says the valuation premium of big tech relative to the S&P 493, so the rest of the benchmark index, is at its lowest since 2019. Joining us now is Goldman Sachs Chief U.S. Equity Strategist David Costin. David, we saw the Mag 7 come down, maybe a little too much. It's now snapped back up, but it's not trading as high as it had been in valuation terms. How much further do you think it can go?
Well, I think the issue to think about, Matt, is the relative earnings growth. And the relative earnings growth for the Magnificent Seven compared with the other 493 stocks is narrowing pretty substantially relative to the last couple of years. So think about last year, there was 30 percentage points premium earnings growth for the 7 stocks. This year, that's going to narrow to probably 10 percentage points and probably close to a push in 2026, pretty much a similar kind of growth rate. And so that narrowing relative earnings growth rate is likely to lead to a narrowing of the outperformance. Now, you had substantial outperformance in 2023, 2024. This year, they're obviously lagging modestly, actually lagging almost 10 percentage points between the other 493 stocks and the Magnificent Seven. So that idea of relative earnings growth rate compressing is pretty substantial. It's one of the reasons why the valuation, the relative valuation, is the lowest it's been in the last 2 years. And so from a starting point of entry, it's actually looking somewhat more attractive at these levels. We're looking for some outperformance, not dramatically so, and it's going to be a function of better outperformance in terms of earnings.
David,
but narrowing.
I think we have to really look at the reasons, though, they've also underperformed, don't we? If you look at the components of the Mag 7 over this year, Apple, Tesla are really where you see a brunt of that pain. This is worries about the consumer front and center here, worries about exposure to China also front and center. Of course, both of those stocks tied very heavily to the rest of the world as well, where there's a significant amount of uncertainty. How long will that all take to clear up before you can see any type of turnaround that you're looking for?
Well, so now an important way to think about this is what happened in the first quarter. I understand that that's backward looking. What happened in the first quarter is still illustrative of what's taking place across the market. In that level of uncertainty, these companies actually delivered very strong results, about 28% year-over-year earnings growth compared with something like 9% for the rest of the market. So put that in context. Expectations coming into the quarter, first quarter results, were around 6% year-over-year earnings growth, and it came in 12. So 12% growth, obviously positive earnings surprises, and it was led by these 7 stocks, which are that resilience of their growth. Now, obviously, that was the first quarter. There's a lot of uncertainty coming into the second quarter and obviously into the third quarter as well, given how the tariffs and the trade negotiations will play out. In that environment, the resilience of the earnings growth for these 7 stocks is probably going to be demonstrated, and that's one of the reasons why the relative valuation might actually improve compared with the last 2 years. The positioning of portfolio managers is light, relatively speaking, in these stocks, lighter than it has been for some time. And the relative earnings growth rate, again, superior, although less dramatically ahead of the other 493 stocks compared to the last couple of years. So those are some of the reasons, Sonali, why I believe, and the expectation is that these companies will outperform this year, but not by, again, as much or as dramatically as you've seen in the last couple of years. There is still a great interest on the part of portfolio managers in the subject of AI and artificial intelligence. And so some of these companies, of course, leading edge in terms of what's happening there.
David, I got to ask about how long you can be certain of that. I noticed that you cut your S&P target twice in March. You raised it twice in May. I imagine it's unusual to change your year-end target 4 times in the span of 3 months. How much how much volatility do you expect to have in that kind of guidance? How much has uncertainty affected, the efficacy of top-down analysis?
Well, it's been a challenging time, as you know, recording this and commentating on a daily basis. It's been challenging to manage money this year, and also as a strategist, of course. Coming into the year, the expectations for U.S. GDP growth was somewhere in the vicinity of 2.5% on a fourth quarter basis. Now it's around 1%. At one point, it was close to 0.5%. That gives you just a sense of the swing in economic activity, which, of course, drives revenues and obviously has impact on margins. And so the effect of the impact of the tariff announcement on the 2nd of April was obviously very significant. And then on the 9th of April, it was extended. A lot of those trade negotiations extended the tariffs until for 90 days, early part of July. So those are some of the reasons why we both cut our estimates and why we've then improved them slightly. We're expecting now 7% earnings growth this year, followed by 7% earnings growth next year. So that's a pretty substantial and healthy earnings growth rate. In comparison, a month ago, the brunt of the tariffs, when we modeled that through our earnings model and valuation, we're looking for only 3% earnings growth. So from 3% to 7%, obviously a big acceleration. And if we look out in the next year, you're looking out 12 months from now, around 6,500 index level for the S&P 500. So that's up roughly 9%. Have a dividend yield on top of that. You're looking somewhere just over 10% on a total return, prospective total return in the next year. Near term, however, more flat, 5,900. If looked out a couple of months, there's still a lot of uncertainty on the trade negotiations. What's going to happen on tariffs? The second quarter earnings likely to be very pressured in terms of the results of individual companies. Those will be released somewhere between the middle of July, middle of August. So that month, there's a lot of uncertainty in the next several months. But if you look further out, the expectations the economy will still grow and we'll have better earnings, and the valuation, not necessarily a multiple expansion, but rather growth in the earnings is key.
David, well, we thank you very much for your regular analysis and, of course, helping investors navigate what has been a very volatile year. That is David Kostin of Goldman Sachs. We're looking forward to the next set of analysis, of course, too. Now, President Trump is downplaying the importance of the state and local tax deduction to passing his giant tax bill as he met with GOP lawmakers on Capitol Hill. We're going to bring in Bloomberg's Tyler Kendall on the Hill for the latest. Now, New York Republicans, among others, are pushing back against this. How successful will this be to get this SALT effort passed in part of the bill?
Yeah, hey, Shonali. So we're going to have to see exactly what President Trump told these lawmakers from these high-tax states like New York, New Jersey, and California. It's our understanding that the meeting is starting to break up now. And actually, just for context, we're here in the House basement because we're hoping to catch some of these lawmakers when they come out of this meeting. Now, of course, the headline that President Trump was really downplaying hiking the SALT cap, saying that ultimately it will benefit blue states with high tax policies. But at the end of the day, these lawmakers really are digging in here. And they have a few different points of leverage, including that many of these moderates are the reason why House Republicans have the majority, which has allowed them to fast track this process through this reconciliation package. And the second, as Matt has often pointed out, they could just let the 2017 tax cuts expire, and that would essentially mean that there would be no SALT cap. But really at the heart of this here is that these House Republicans need to reach some sort of deal with the fiscal hawks who want to see more savings policies, whether that be spending cuts or revenue raisers, in order to get behind a more meaningful lift when it comes to the SALT cap.
All right, very interesting stuff, Tyler, and I will be following this very closely. I'm sure you will as well. Bloomberg's Tyler Kendall there in the basement on Capitol Hill. Tomorrow, we're going to have an exclusive interview upstairs with the House Speaker, Mike Johnson. That's at 9 a.m. New York time. Definitely an interview you do not want to miss.
And coming up, we're going to talk about the IPO market because you are starting to see a rebound, and globally, too. So we're going to speak with Citigroup's global head of technology, media, and telecommunications next in the Wall Street Beat. And still ahead, more from our interview with Elon Musk at the Qatar Economic Forum. Don't miss that. Here's what he had to say.
How committed you are to Tesla. Do you see yourself, and are you committed to still being the chief executive of Tesla in 5 years' time?
Yes.
No doubt about that at all.
Well, no, I might die.
Let's get now to high interest to look at what's making headlines around the world. Hong Kong's pension fund managers are concerned that they may have to sell their U.S. Treasury holdings thanks to Moody's downgrade of U.S. debt. The funds are only allowed to invest over 10% of their assets in Treasuries if the U.S. has a AAA rating. But in light of the downgrade, Hong Kong Investment Funds Association is recommending the authorities allow funds to invest in U.S. Treasuries even if they're rated one notch below AAA as they currently are. So something to watch. Goldman Sachs is looking to open more offices and boost its headcount in the Middle East. The big bank joins the latest trend of Wall Street banks expanding in that region. Countries in the Middle East are undergoing multi-billion-dollar investment programs aimed at remaking their economies and reducing their dependence on oil. And CATL soaring in its Hong Kong trading debut. The success of the stock offering is raising hopes that other companies will follow suit. Earlier today, Mary Callahan Erdos of JP Morgan Asset and Wealth Management shared her thoughts on a possible IPO revival during a panel with Bloomberg's Jumana Bersetchi at the Qatar Economic Forum in Doha.
You see a lot of deal conversations happening. We have been very busy on the capital market side, and I think you're going to see the market start to open up here. We have some happening in Asia, some of the largest that we've had in a long time, and we're excited about it. And I think the markets are ready for it.
And that brings us to today's Wall Street Beat. Here to discuss more about the return of the IPO market. How are we going to see it? We're bringing in Phil Drury. He's the global head of technology, media, and communications investment banking at Citigroup. Citigroup was on some of the most recent IPOs. We're watching Mountain coming to market. Of course, that's your buddy over there,
Mark D.
Mark Douglas. And then you also had eToro, which did tremendously well. What are you hearing for investors in terms of the types of companies they want to be buying on first issue?
Yeah, the lull we've seen in the equity capital markets since the peak of 2021, frankly, is less about lack of investor appetite and more about companies very well capitalized in 2021 and no rush to come to the public markets. So we've seen companies over this period bridge the valuations that they achieved in 2021. So we're starting to see more sell-side appetite. The buy-side investor appetite, I think, has always been there. IPOs are a great opportunity to receive alpha in your investment portfolio and invest in a company that's differentiated from your public seasoned portfolio. I think right now investors are focused on the growth that IPOs are able to produce, but with near-term lines to profitability. So either profitable companies or companies that within the next 12 to 18 months are going to achieve profitability. And I think we're starting to see a trickle now. We thought the beginning of 2025 would be much more active. There are so many companies that are private that have been waiting to come to the public markets. But obviously the near-term volatility with the VIX spiking at 50 post-April 2nd made that difficult and distracting. Now with the VIX below 20, feels like we've got a period here where we'll see some IPOs come to market.
How quickly do these things move, by the way? You know, Mountain's a stock. I've been talking to Mark Douglas for years and years because of his expertise on the advertising market and social media. I don't have any inside information on that IPO, but I feel like when Trade Desk started to tank, the IPO was at least put on ice. And now that you've seen that recovery, you mentioned the VIX, for example, they're going to go. How quickly do these things change? Is it week by week? Is it month by month?
Just like M&A is more long cycle, IPOs are also quite long cycle, right? The planning, the thought that goes into an IPO is not short-term thinking. You know, convertible bonds, debt financing, investment grade debt financing can be more short cycle and look for windows of opportunity. The intent to go public is very strategic. So I think the intent is long cycle, and then just picking the right period of time to expose yourself to the to public markets is more window driven. And the volatility in the VIX is a great measure. Seeing some follow-on offerings priced at normalized discounts is a good measure. And we've seen some follow-on equity offerings. We've seen some convertible bonds, which is a great bridge in periods of volatility, come and price in the marketplace. So we look for those signals. Tactics are also important. So we do as much as we can before we go in the public realm through testing the waters and speaking to investors. So when we launch IPOs, we have a high level of confidence in the success of the execution of the IPOs.
So given that so many companies have been waiting throughout the course of this year and even last year, how big is that pipeline?
I mean, it's very, very significant. There are 3,800 companies held with private equity alone in funds dated 5 to 12 years. So, and we've talked about pressure on DPI and private equity and sponsors looking to exit. They also have a tremendous amount of dry powder, so it is a two-way market. But there's a significant backlog. But there are alternatives as well. M&A was a record quarter for us in Q1. We have strategic buyers and sponsors on either side of that trade deploying capital, but also looking to exit long-dated portfolios and funds. So, we see good potential, good alternatives for private companies moving forward, either strategic sales or the public markets. But it's a significant backlog.
You mentioned buy-side interest always being there, sell-side kind of coming back. It doesn't seem like there's a hunger from retail investors for IPOs the way there was, I guess, during the last wave, in which maybe they got burned with things like Rivian and Lucid. I obviously follow the car world very closely, but is that the case, do you think? Because I don't have friends from high school calling me asking to get Syndicate.
I don't know. eToro, though, kind of surged on the first day also. It's kind of a mixed bag, isn't it?
Yeah, look, I think there's just been a deficit in IPOs. So some of the muscle memory of retail investing hasn't been there in terms of the opportunity. But I think as we see companies come to market in the US, I think that retail interest will grow. And retail is a real feature of the depth of the US capital markets. You don't get the same level of retail demand in Europe and around the rest of the world. So it's an important feature. It comes into play in terms of the democratization of the capital markets. And I do think once we'll see some examples of successful IPOs, I think that retail interest will come to life again.
Now, what about M&A? You mentioned that this is becoming more and more of a path. We haven't seen a ton of it, although, of course, you did see Alphabet come in earlier this year with a mega deal. We had seen an information report for potential investment by NVIDIA into a quantum computing company. So it's coming back. How much demand is there from the technology giants to do something significant? Yeah,
we've got very active dialogue at the moment with strategics, with companies around M&A. I mean, we announced on Friday the Charter Cox Communications combination. That's $34.5 billion and the largest M&A announcement of the year. And as I said, M&A is long cycle. M&A is not reacting to short cycle, either tailwinds or headwinds. These are strategic dialogue that's been taking place for years and then manifests itself. Look, technology and the need for innovation is causing companies to rethink their path. It will lead to future M&A. AI is obviously a great opportunity for companies to become more productive, more efficient. It's pushing the boundaries of innovation. That will lead to more and more M&A. And companies are looking at themselves through this inflection point. We've talked about the trade negotiations. We talk about allies of the United States, etc. And so as they rethink their supply chains as well, technology, rethinking supply chains will lead to greater M&A, both strategic, but also sponsors with the amount of dry powder they have to deploy.
Phil, I think we got to leave it there, but great point. I hadn't realized you were on the Charter Cox deal. That brings Citigroup, Matt, to the number 4 spot for the year. We're halfway into the year. It's time to look at the league tables. And, it's a pretty hefty jump from number 5. Citigroup has more than 13% market share, according to Bloomberg data. The next largest is less than 9%.
All right, very interesting.
It's a big push for James
Phil,
Fraser.
great to have you here. Thanks so much for coming in. Phil Drury there from Citi. Got to be one of the most global banks in world history. Coming up, Elon Musk tells Bloomberg he'll scale back on his political spending. More from that exclusive conversation next. This is Open Interest.
And now to the Qatar Economic Forum, where Elon Musk joined Bloomberg's Michal Hussein for a wide-ranging conversation. Here's what he had to say about his future at Tesla.
Europe is our weakest market. We're strong everywhere else. Our sales are doing well at this point. We don't anticipate any meaningful sales shortfall, and obviously the stock market recognizes that, since we're now back over $1 trillion in market cap. So clearly the market is aware of the situation. So it's already turned around.
But sales still down compared to this time last year?
In Europe.
In Europe, okay. And
yes, but that's true of all manufacturers. There's no exceptions.
Does that mean that you're not going to be able... Does that mean...
The European market is quite weak.
Okay, but you would acknowledge, wouldn't you, that what you are facing, okay, let's just take it as Europe, what you are facing is a significant problem. This Tesla was an incredibly aspirational brand. People identified with it. They saw it as being at the forefront of the climate crisis, and now people are driving around with stickers in their cars saying, I bought this before we knew Elon was crazy.
And there are also people who are buying it because Elon's crazy, or however they may view it. So yes, we've lost some sales perhaps on the left, but we've gained them on the right. The sales numbers at this point are strong, and we see no problem with demand.
So what?
And I mean, you can just look at the stock price. If you want the best inside information, the stock market analysts have that, and our stock wouldn't be trading near all-time highs if it was not, if things weren't in good shape. They're fine. Don't worry about it.
Okay. I was citing sales figures rather than share price. Well, tell me then how committed you are to Tesla. Do you see yourself, and are you committed to still being the chief executive of Tesla in 5 years' time?
Yes.
No doubt about that at all.
Well, no, I might die.
Okay, short of that.
I can't be CEO if I'm dead, so there's a slight amount of time.
Does that mean that the value of your pay doesn't have any bearing on your decision?
Well, that's not really a subject of discussion in this forum. I think obviously there should be compensation for, if something incredible is done, that compensation should match that something incredible was done. But I'm confident that whatever some activist posing as a judge in Delaware happens to do will not affect the future compensation.
Michal Hussain, editor-at-large for Bloomberg, who conducted the interview for Bloomberg Weekend, of course. She joins us now from Doha. A ton of news, a potential Starlink IPO, stepping back from political donations to a large degree in the United States, staying on board at the helm of Tesla. I pass the baton to you, Michal. What did you most take away?
Oh, well, Sonali, it's lovely to be with you and to have a moment to catch my breath and think back on this interview, because what you just played was the first few minutes of a long conversation of more than half an hour. There was a lot to take away. The political spending side of it is, I think, extremely consequential, because remember, what he spent on getting Donald Trump elected was around 10 times, if not more than 10 times, what he envisaged when 3 years ago here in Doha he was asked about spending on the next US general election. So clearly a lot has changed in his life. And on Tesla, he really came out fighting. You know, you heard his words there saying the brand is already rebounded. Now, we'll have to wait and see, of course, what the sales figures in Europe, which he acknowledged was the weakest market for Tesla, look like in the months ahead. But I cited April figures because it's clear from those that things are continuing, the problems are continuing for Tesla in Europe beyond Q1. So I think that the jury is going to be out, or the data will tell its own tale in the months ahead. But overall, he was so much more interested in and committed to talking about his corporate world rather than his government world, although of course he does have to combine both of those right now and into the future, because the Doge work and the work at Donald Trump's side is going to continue.
I thought it was interesting, Michal, when you asked him if it had been a pivotal year, and he just seemed so exasperated. He's been through, obviously, so much. It's his decision, so I'm not, I'm not playing a tiny little violin for him, but he did say he's going to pull back on political spending. He did say he felt like he had done enough. Did you get the sense that he'd really been through the ringer and he's had enough?
Was the impression I came away with, because of course he's had so many really difficult moments in his corporate life, right? The kind of the businesses he's gone, the new technologies he's developed, he's had a lot of difficult moments along the way where things didn't work out the way he had imagined or hoped for, and he has come through those. But this year has got to feel different. It is that combination of business and politics. And on the political spending point, there will be other countries who will be watching that really carefully and wondering whether that feeling, that instinct, those words he expressed about essentially, I'm not going to do more political spending unless I really feel a need, whether that applies to them as well as to the United States. Remember, in the UK, there's tremendous interest on whether Elon Musk might find a way to fund the Reform Party, whether there might be some kind of vehicle that he finds, UK-based vehicle that allows him to do that. He's been a supporter of the AfD in Germany. So it will be really interesting to see whether that is something, that intent that he's expressed with us today is something that applies beyond the United States.
All right, Michelle, thanks very much. I think a lot of us are glad that that is done. I'm sure it must have been a stressful situation. Just the setup looked pretty ominous for you. Bloomberg Weekend editor-at-large Michal Hussein at the Qatar Economic Forum in Doha. She had that huge screen of Elon Musk staring down at her in that echoey hall. What an interview.
What an interview. And you can see Tesla shares still up on the screen, still up almost 1%. People want him to stick around and focus.
Yeah, absolutely. I mean, that's why they bought the shares. It's not $1 trillion stock for building cars. Let's switch gears to football in a way. In 2021, college sports changed forever when the NCAA allowed student athletes to make money using their name, image, and likeness. That's why it's known as NIL. According to one study, the total NIL market is projected to reach $1 2/3 billion this year. For more on the college sports landscape, we are joined by Cole Gahagan, Learfield CEO. Learfield is a sports marketing company that represents over 200 Division I colleges, including the Ohio State Buckeyes, and they have helped 2,000 athletes secure NIL sponsorships. So, Cole, great to have you in the studio. Thanks so much for joining us. This is a big, big business. Wow. How does Learfield take part in it?
Well, Matt's going to be with you. We take part in it in a lot of ways. We sort of sit at the center of everything that's happening commercially in college athletics. We have 6 operating business units that service universities and brand partners all over the globe, and we are involved in everything from event ticketing, the largest ticketing provider in college athletics, to sports marketing and sponsorship, sales and media business with our university partners, to overseeing the official athletics sites and the mobile apps for all of our school partners. So it's an exciting time in college athletics, as you alluded to, and it's a really exciting time for those of us who sort of sit at the center of college athletics at Learfield.
You know, one thing I wonder is what this means for the colleges themselves, because you're at a moment in the United States where, of course, college is under a lot of pressure when it comes to financing, but you have like the Villanova commercial for March Madness, and you have to wonder have you seen this commercial?
No.
Oh, it's amazing. We have to make you a Knicks fan. But if you see a commercial like that, you have to imagine it has to be amazing for the schools too.
It is. I think it's been amazing for pretty much everybody in the ecosystem in college sports. It's been great for the schools. It's been terrific for the athletes. I mean, for the first time in history, as you, Matt, touched on, in July of 2021, the NCAA ruled that student athletes could start making money off of their name, image, and likeness. This was probably 70 to 80 years in the making. It was long overdue. So it's been exciting for the athletes themselves. It's been exciting for the schools. It's also been exciting for the brands that orbit college athletics. At Learfield, we work with over 12,000 brands. Again, most of them domestic, a lot of them also, though, from overseas, who are building their brand and their brand equity by partnering with schools and now partnering with athletes. So it's been great for the schools. It's been great for the athletes. And we're seeing that it's been really positive for the brands as well that are finding ways to tell stories now with these student athletes.
I worry about the kids to some extent. I worried about them when they weren't getting money, and now I worry about them that they are. What do you do to make sure they're better equipped to deal with, in some cases, huge financial windfalls?
Well, look, a lot of credit goes to the universities. If you actually think about the evolution of name, image, and likeness in college athletics, or what is soon to be compensation to athletes, in college sports, we've been doing it for 3 years. The pro leagues have been doing this in some cases for over a century. Major League Baseball was founded in 1876. The NFL, as we know it, was founded in 1920. NBA was founded in 1946. So they have a century plus head start on crafting a business that helps, not only is geared towards compensation to these athletes, but also helps those athletes at a very young age determine what to do with it. And I think the schools, in a very short period of time, have done a phenomenal job building out resources to help those athletes now know what to do in this sort of newfound, in many cases, wealth.
The President of the United States had a conversation with Nick Saban, and apparently this has led to pushback. It has led to the President being very worried and maybe even looking at ways to rein some of this in. What does that mean for the uncertainties around, let's say, the strides that have been made for NIL?
I can't speak for President Trump. I can't speak for Coach Saban and those who have, I think, had conversations with the president over the last several months. I don't know if it's as much about reining it in as it is helping to determine what the right path forward is going to be for college athletics, again, so that it ensures we protect institutions that have been providing opportunities for athletes for centuries, that we give athletes the right opportunities and those who orbit the space the right opportunities. So I don't know if it's about reining it in as much as it is ensuring that we've got the right pathway forward. Here's what we know. The president is a big sports fan, as he's open to saying pretty frequently. I think he's a big college sports fan as well. He attends games every single year. So I'd like to think that whether it's the president's involvement or it's lawmakers' involvement, that we're going to find in the years ahead a continued improving, path for college sports.
Cole, what kind of growth do you see? I mean, obviously, we're all going to watch March Madness. We're all going to watch the national championship in football. But there are a lot of other sports that are emerging as, interesting markets that, for example, women's sports are starting to get a lot more viewers, people paying for tickets. So what kind of growth do you see?
It's pretty significant. I mean, let's just stay within NIL growth for 1 second as an example. When NIL first launched in 2021, the year that followed, the deals that we were tracking, now to put it into context, Learfield by and away does more deals in college athletics for athletes and for brands than any other business. This year alone, we've done over $140 million worth of deals that included NIL opportunities for athletes. That's up from $69 million in the last fiscal year. Quite literally, we're seeing exponential growth of these opportunities. Now, within that deal-making kind of ecosystem, when we first launched 3 years ago with NIL, the ratios of deals that were being done for men athletes over female athletes was about 60-40. That was year one. Year two, which was last year, we saw that start to balance a little bit more at 43% for women and 57% for men. This year, we've seen almost a complete balancing of it at 51% for men athletes and 49% for female. So we're starting to see not just growth in ticket sales, in activity and sponsorship involvement with women's sports, we're also starting to see a balancing of female athletes involved in NIL campaigns as well.
We'll be looking forward to keeping an eye on that. Nothing to say of youth sports. Maybe that 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 nothing to nothing to say of youth sports. Maybe that nothing to say of youth sports. Maybe that.
No doubt about that at all.
Well,